A local driver saw his premium go up 33%. He's a senior on a fixed income with no tickets or accidents, but we learned it's factors outside of his control causing rates to soar. These are the notices policyholders dread.
I was in a state of shock when I opened it up. My total cost last year, this is just for 2 cars, was $2,770. And this year, the total premium was $3,705.
David Willeford said he immediately called AARP for the Hartford for an explanation.
He says, well, sir, you know, all insurance companies are going up. They're all raising their rates. She says the cost of doing business is increasing, the cost of parts and supplies and automobiles and so forth. It just keeps going up.
He wants to know why those costs are being passed along to him.
How long have you been a customer of theirs?
14 years.
Have you had any recent accidents?
Never.
Do you have a new car?
2019 and a 2021.
So did they give any other kind of explanation pertaining to your driving record or your choice in vehicle that...
No, they commended me. They commended me.
I'm a consumer of auto insurance too, so I've had the same experience.
Maryland Insurance Commissioner Kathleen Bourrain oversees the agency responsible for regulating insurers in the state. She said they're seeing rate increases across the board from 1.8% to nearly 50%.
The primary driver of the increase in premium is the increases in losses that insurance companies are required to pay. The cost of an accident, the cost of parts, the cost of medical care when there's a bodily injury claim, the cost of a jury verdict, and the amounts of verdicts that are increasing over time.
Carriers must have enough capital to remain solvent, so more losses means more money is needed to be able to cover future claims. And Maryland is what's called a file-in-use state, meaning insurers don't need approval before raising rates.
Our job is to review them and to make sure that they meet certain standards. That is, they're not unfairly discriminatory, that they are actuarially sound, that they are not excessive.
We asked her to define excessive.
Only if there isn't enough competition in this space could I conclude that a rate is excessive. And there is a lot of competition in this space.
But in 12 states and most recently D.C., insurance regulators do have that power and require prior approval before insurers can change their rates. Something Bourrain says Maryland has looked at, but she doesn't believe would make much of a difference.
Prior approval does not equal changing the cost drivers. If you look at D.C. as an example so far, I don't think we've seen a whole lot of difference between what the rates are between prior approval and competitive.
Her solution for policyholders is to aggressively shop around. The MIA has an online tool where you can compare insurance rates. You can also ask for discounts for driver history and partner programs. David was offered a $300 discount if he raises his deductible from $500 to $1,000. But that increases his out-of-pocket costs should he need to file a claim.
It does affect my budget. And my wife and I are retired. We're 77 years old. We drive very little, but still, you know, we're on fixed income.
David said his homeowner's insurance premium also increased $350 a year. He's now looking around before switching companies. The commissioner added that any policyholder who sees a rate increase of more than 15% can file a complaint with their agency. She said oftentimes the adjustments are accurate, but they can help you better understand what contributed to the increase and where to shop to find a better rate. I hope you enjoyed that Matter for Mallory. To watch more Matter for Mallory stories, click the box in the corner and be sure to tap that circle and subscribe to WMAR 2 News for quick access to great content posted every day.